Welcome to the Small Business Tax Savings Podcast, your weekly dose of accounting and tax tips specific to small business owners. You will be on your way to growing your business and paying the least amount in taxes as legally possible. Here's your host, Mike Jesowshek, CPA.
Hello and welcome to another episode. Today's topic is how can I lower my tax bill after year end? Now, if you've been listening to our podcast for a while or following our blog posts or our YouTube channel, you know that we stress the importance of tax planning throughout the year and not just during tax season. The fact remains true that if you're looking for and thinking about tax strategies now in tax season for last year's activity, 2022, you missed out on a lot of opportunities. And we always say when you hear the word taxes, we want you to be thinking about tax planning, not tax prep and filing. That's important. That's required by law, and that's something we're going to do. But we want you to first be thinking about tax planning because those are things that you can do throughout the year. Tax prep and filing is after year end. Now, with that being said, we always do say that there are a few options available for those latecomers, those that didn't get to tax plan throughout the year. There are a few options available for you here in tax season, and that's what we want to talk about here. We're going to outline tax strategies that may be available to you now in season for last year, 2022's activity. Let this serve as a reminder. Most tax strategies that you want to implement need to be done before 12/31. So we've been talking about already on the podcast this year. Start tax planning now. Use this. If you're looking for strategies now to offset income last year, use this as a reminder to you of things that you want to make sure that you're doing this year now so that you're not facing the same situation when you get to tax season next year. So let's start off. What strategies are still available for you? And first, we want to start off about what retirement tax strategies are available for you after year end. The first one, Traditional IRA or Roth IRA. And these are just standard retirement accounts that are available to both business owners and non-business owners. You can contribute to a Traditional IRA or a Roth IRA until your tax filing date or due date. So that'd be April 18th this year. So you can contribute to a Traditional IRA or Roth IRA up until the tax filing date or that original due date, not including extensions. So the IRA limits for a Traditional IRA are $6,000, or if you're 50 or older, there's another $1,000. There is no phase out for a Traditional IRA deduction if you and your spouse are not a participant in an employer plan. Now, if you are a participant in an employer plan, and you have an adjusted gross income of $109,000 or more if you're married, or $69,000 if you're single, it will start to phase out. If you are a non-participant married to a participant, that phase out starts at $204,000. For a Roth IRA, again, same limits, $6,000 per year or per individual, or $7,000 if you're over 50. And that's going to start to phase out once you hit an adjusted gross income of $204,000 if you're married, or $129,000 if you're single. So here in tax season, up until the day you file your taxes or the original due date, whatever is sooner, you can contribute to a Traditional IRA or a Roth IRA. Now, let's talk about employee contributions to a retirement plan. That's no longer available. Those would have had to be done before 12/31. And again, this is employee contributions to a business retirement plan. Now, if you have a SEP IRA, a solo 401k, a 401k, some type of profit sharing plan, and you have employer contributions, you can contribute up until your tax filing date, including extensions. Again, this is just for the employer contributions. So let's run through a quick example. Let's say you're a sole proprietor and want to make a SEP IRA contribution related to your 2022 income, and you've extended your personal tax return. You can make that SEP IRA contribution up until the date you file with a maximum of your extended due date for that return. SEP IRA and 401k employer contribution limits are 25% of W-2 wages or 20% of net self-employment income if you're a sole proprietor. So the max you can do to a SEP IRA or a 401k for the employer contributions is 25% of W-2 wages or 20% of your net self-employment income if you're operating as a sole proprietor. They also max out at $61,000. So what retirement tax strategies are available after year end? A Traditional IRA, a Roth IRA, or employer contributions to a retirement plan. Employee contributions to retirement plan, no longer available after 12/31. Let's go to now what business tax strategies are available after year end. The first one I want to talk about, and we stress this a lot, is just having complete and accurate bookkeeping. If you've not yet completed your bookkeeping, do so now. This is an area where so many deductions are missed. Go through all of your spending for the year with a fine-tooth comb and see if there are any deductions related to the business that can be added to the bookkeeping if they haven't been already. So some things you might want to look at are items on your personal return that maybe were business related. We can still add these as long as you haven't filed your return. So think of things like your internet, cell phone, asset purchases. These could be laptops, tablets, watches, smartwatches. Think about meal expenses, gifts that you may have made, insurance costs, a home office, or maybe some travel costs. Again, these are all things, if you haven't filed your business tax return, we can still look to potentially take advantage of. Essentially, what we're saying is just take the time to see if there were business expenses that may have been paid personally that can be switched over and included into your bookkeeping and thus your tax return. Again, these are things that we would prefer to do during the year, but there's still time available to. Home office deduction. This is another big one for business owners. Don't be afraid to take a valid home office deduction. We did an entire episode midway through last year about the home office deduction. Don't be afraid of it. Somewhere along the line, accountants tried to scare business owners with this one, saying that, it's a red flag, but it is a completely legal deduction, and we highly recommend it that every business owner take advantage of it as long as you're doing it the right way. So don't forget to take advantage of the home office deduction. Automobile expense. Now, if you had a vehicle purchase, that would have had to have been done before 12/31 and would also likely have then been included on your bookkeeping. But with automobile purchases now, we're going to specifically be talking about mileage. Did you have a personal vehicle that you had some business use on? Be sure to calculate that and include it in your tax filing. Think about that mileage that you had there and make sure you include it in your tax filing. Now, we talked about retirement. We talked about some business strategies. Again, when it comes to the business side, just make sure your bookkeeping is completed. Make sure you're not missing any expenses. Again, if you're not caught up with your bookkeeping yet this year for last year, do that now and get on a regular schedule moving forward. We see so many people miss deductions on bookkeeping because they're not doing it on a regular basis, and thus they miss track of and lose deductions they likely could have made if they were on top of it right away. But what other tax strategies are available after year end? A big one we talk about is a health savings account or an HSA. And again, we did a whole article on an HSA and why we believe this is a strategy that everybody should be utilizing and maxing out if you qualify and have the funds to do so. Now, with an HSA, you can contribute to your HSA until your tax filing due date, which is April 18th. So basically, you're able to contribute to your HSA for the tax year 2022 up until April 18th of 2023. Now, here's a reminder. The 2022 HSA contributions are limited to $3,650 for yourself or $7,300 for a family, and you need to have a high deductible health plan. If you want to learn more about HSAs, what they mean, why you should be utilizing it, why we kind of say it's a powerful tool to use not only for health costs, but also a potential secondary retirement account, check out our article on health savings accounts. And the other item is a Coverdell IRA, and this is an IRA designed for education savings. Now, you do not get a tax deduction for this one, but when you withdraw from it for qualified education expenses, it is tax-free, including the earnings. And you can contribute to a Coverdell IRA until your tax filing due date, which again is April 18th. And the amount that you can contribute to a Coverdell IRA for 2022 is $2,000 per beneficiary. Now, the person that contributes to that Coverdell must have an AGI or adjusted gross income of 110 or less if you're single, or 220,000 if you're married. So there is a deadline for that, again, April 18th. So let's go through these again. What retirement tax strategies are available after year end? Traditional IRA, Roth IRA, or employer contributions to a SEP IRA, solo 401k, 401k profit sharing, those types of items. Employee contributions to a retirement plan had to have been done before 12/31. When we look at what business strategies are available, make sure you have complete and accurate bookkeeping. Do a fine-tooth comb for those things to make sure you're not missing out on anything that maybe you paid for personally that was business related. Make sure you're taking advantage of the home office deduction. This is a valid business deduction if done correctly. Nothing you want to be afraid about. Also, if you have a vehicle that you use personally that was business related, make sure you take the mileage and factor that into your business tax return filing as well. We talk about other tax strategies that are available after year end. We talk about the health savings account or the Coverdell IRA. So let's go through kind of a calendar of deadlines for in-season tax saving strategies, because some of these are your original due date and others can include extensions. So the deadline for April 18th, or the filing date, if earlier, would be a traditional IRA or Roth IRA, health savings account, and a Coverdell IRA. So if you want to take advantage of a traditional or Roth IRA, an HSA, or a Coverdell for last year, 2022, you need to make that payment before your filing date or April 18th, whatever's earlier. The employer contributions to a SEP IRA, a solo 401k, a profit sharing plan, and business strategies like the home office, those types of things, that just has to be done by your filing date, and that includes extensions. So again, April 18th, no extensions for traditional IRA or Roth IRA, health savings account, or a Coverdell. Employer contributions to a SEP IRA, solo 401k, profit sharing, and business strategies would have to be done and completed by your filing date, including extensions. So hopefully this gives you an idea of a few last minute options. And if you're stuck with a big tax bill this year, just let this serve as a big reminder to get on top of tax planning for 2023 earlier this year, so that you can ensure that next year, when you go to pay your taxes, you're paying the least amount in taxes as legally possible. If you're not yet a member of our tax minimization program, check it out. This is exactly what we talk about. We talk about all sorts of tax strategies to make sure that you're paying the least amount in taxes as legally possible. We have downloads, we have guides, we have group trainings, we have all sorts of activity that, again, has one goal in mind, making sure that you pay the least amount in taxes as legally possible. So there is still some strategies available that we talked about today, some in-season things that you can do to lower that tax bill. But again, let this serve as a reminder. Make 2023 the year that you actually do tax planning throughout the year. Make 2023 the year that you pay the least amount in taxes legally possible by implementing the strategies that are available to you as a business owner. Thank you for listening to another episode, and I will see you next week.
This has been another episode of the Small Business Tax Savings Podcast. If you enjoy our weekly episodes, please leave a review and share with other business owners. You can find previous episodes and more information at www.taxsavingspodcast.com. Thanks for listening and have a great day.